FHA or conventional mortgages, which is less expensive? And do I have a choice? We're going to cover all the questions you should be asking about FHA versus conventional mortgages on today's video. I'm Peter Lindquist, your mortgage guy with the Lindquist team. In this video, we're going to be talking about qualifying for FHA and conventional, the costs, which is less expensive, interest rates, mortgage insurance, and then seller acceptance. We want you to be able to have all the knowledge you need when you're talking to your mortgage lender about which of these would be best for you. And hey, if you like this video, be sure to click that little thumb down there. That's telling the world that you like the video. And then click subscribe and add a comment. We would love to hear from you if you've got questions or need some additional clarification on anything we discussed today. Thanks for joining us, and let's get right into it. So the first part about FHA versus conventional really comes down to qualifying. Generally speaking, it's easier to qualify for an FHA mortgage versus a conventional mortgage. FHA will be more liberal when it comes to lower credit scores and higher debt to income ratios, as well as some big factors like bankruptcy. If you had a bankruptcy between 2 and 4 years ago, conventional won't accept that, only FHA will. Or if you had a foreclosure between 3 and 7 years ago, that would be FHA only. Conventional doesn't accept a foreclosure under 7 years. So sometimes it really just comes down to, can you qualify for a conventional loan? But there are many times when you actually have an option. And you might be surprised at how many people should actually be giving FHA a consideration as a mortgage option that's overall better for them than conventional. There's no one standard answer to any of this. Just want to get you the information for you to consider. So assuming you do have a choice between FHA and conventional, cost is really one major factor. FHA has lower interest rates almost all the time, and it always is going to have mortgage insurance at a rate of 0.55%. But one of the main factors that you have to consider is that FHA charges mortgage insurance in two ways. There's the monthly premium, and then there's the upfront mortgage insurance premium, which is financed on top of the loan. It's 1.75% of your mortgage currently, and that's a significant number. If you had a $300,000 loan, that'd be $5,200 that would be financed on top of your loan as a one-time fee. It increases the balance of your loan. So you don't really feel it at closing. You feel that $5,250 when you go to refinance the house or when you go to sell the house. Your mortgage balance is $5,200 higher than it would be with a conventional loan. So doesn't that automatically make FHA more expensive? No, not necessarily. Let's make an apples to apples comparison. So with FHA, let's assume for the moment that mortgage rates are 6.5 and you're paying the monthly mortgage insurance premium of 0.55. Let's add those together. 6.5 and 0.55 is 7.05%. Plus you paid this 1.75 mortgage insurance premium. Now let's compare it to a conventional loan. To make it an apples to apples comparison, we have to take into consideration that 1.75% that you're paying in FHA mortgage insurance. So conventional, let's take that amount and let's use it as discount points to reduce your interest rate. By doing that, we've got a fair comparison from FHA to conventional because they're both costing the same if you were to choose to do that. Now, a look at those comparisons today might say that mortgage rate is 6.75%, and the mortgage insurance is 0.6%. So that total is 7.35%. So the conventional loan has a combined rate, if we're making apples to apples, 7.35 versus FHA, which is at 7.05. So FHA technically would be less expensive in that scenario. But here's the thing to understand about conventional loans is the interest rate and mortgage insurance rate vary based on a number of factors. How much your down payment is, what type of property it is, what your credit score is, how many people are on the loan. So there's no real simple answer for this. It really depends on what your mortgage lender is presenting you with. So you want to, if you have the option for both of them, you'll want to compare the costs of FHA versus conventional to see which is better. Now, I want to make a note on this, is that you might find FHA to be overall less expensive, but you also might find that, hey, paying all of these discount points up front isn't necessarily good. You might have decided you're buying a house and not going to stay there forever. Well, then you may want to consider conventional loans because you don't necessarily have to pay those discount points. I'm only adding that to this scenario so that we have an apples to apples comparison. As a rule of thumb, if your credit score is less than 720, you will want to have a comparison between FHA and conventional because conventional loans really increase their cost and their rates for credit scores under that amount. You may find that conventional still blows it out of the water, but it's at least worth a consideration. Once you get above 720 and especially above 740, it's going to be very difficult for FHA to compare to conventional financing. And the higher the down payment, 20% down or more, FHA is still going to charge you the monthly premium and that upfront mortgage insurance premium, and conventional is charging you nothing. So from a consideration standpoint, those factors get involved as well. I just want you to be able to know what you're asking your mortgage lender. If you have, generally speaking, credit scores under 720 and down payments less than 20%, that's kind of an indicator when you'll want to be asking for a comparison side by side. So one point I want to make about mortgage insurance and FHA is that in almost all occasions, the mortgage insurance that is charged on your FHA loan will stay on your FHA loan for as long as you hold the mortgage, whereas conventional loans typically have some type of removable feature once you get to 20% equity, for example. So for some buyers, they'll say, well, I don't want to pay mortgage insurance for the rest of my life, so I'm not going to use an FHA loan. Well, I want to just suggest to keep realistic about it. Mortgages don't necessarily last your whole life. In fact, I don't know anyone that ever did have a mortgage for their whole life. So commonly, mortgages are refinanced within 5 to 7 years, or people sell their house and buy another. So you might be looking at mortgage insurance and saying, I'm going to have it for 30 years. Realistically, probably not. Probably closer to the 5 to 7 year period. I'll also note that if you put 10% down with FHA, then the mortgage insurance goes away after 11 years. But that's a fairly uncommon occurrence. Okay, we really want to talk about seller acceptance also. This is especially true if you have a choice between the two options. I've had buyers who, after reviewing the options, have chosen conventional loans, even though it's more expensive, because they believed that they had a competitive advantage when making an offer on a property. And from what I've heard from real estate agents in general, is that if a seller is looking at multiple offers, they are less inclined to choose an FHA offer over a conventional offer. And from what I can tell, there's basically two reasons why. One is that since it's easier to qualify for an FHA loan, the seller might perceive that the FHA buyer is not as strong as a conventional buyer, so things might go wrong during the transaction. So if the seller holds that belief and they've got FHA versus conventional, they'll lean towards the conventional offer. The other reason is that FHA tends to be pickier with regards to the quality of the home versus conventional. So, for example, if you've got a home that's older than 1978 and has chipping paint on it, FHA will require the seller to scrape and paint that chipping paint because they'll make the assumption that it is lead-based paint. So the seller may have work orders to do with an FHA offer versus a conventional offer. But that being said, if you're going into a property that doesn't have many competitive offers or any, now the seller will be open to considering an FHA offer just as they would be to a conventional offer. So, in summary, there's no one pat answer as to which one is better for you. But I do want to suggest that if your credit score is 740 or higher and your lender is offering you an FHA loan, I might suggest asking, why are we talking about FHA when I have this credit score? They might have a perfectly good reason. Your debt to income ratio is too high, for example, or other kinds of guidelines, but it's at least should trigger that question. And then alternatively, if your credit score is under 720 and you are choosing a conventional loan, I would at least encourage you to ask, can I compare this to FHA so I can make a determination as to which one is less expensive for me? And then finally, I would highly suggest you talk with your realtor and ask them, hey, if I've got an FHA offer, will I be able to negotiate a contract in my marketplace? Your realtor could give you a lot of advice from that standpoint as to what type of offer is acceptable. I will say that as mortgage rates have gone up at the tail end of 2023 and the market has slowed, that more sellers are open to taking offers with FHA financing, at least in my market. Great. Thanks for taking the time to be with me today. I hope that you found this helpful. If you've got any questions at all, please feel free to leave them in the comments below. All of my contact information is in the description below, so feel free to reach out to me directly. Thanks again for watching.